The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 258. You get the Nasdaq up 53. S&Ps are up 15.5. You wake up, short trading week out here. Bottom line, they blow up the numbers, no doubt about that. When we go inside the Dow Industrials, this is where it's going to get really interesting, folks. And what it is that each and every time this Dow gets higher, it's a lot easier for it to get a lot higher. Why? Because you're talking about a price-weighted index. So when people do see you're up 250, it's like, okay, it's a percent. It's a big number. There's no doubt about that. When you do take a look at what's moving it, though, it's always these high price stocks. You got Boeing is the big number out here today. Out of the 250 points, 51 of those are Boeing, putting positive points. You get United Health putting 40. You get Merck putting 27. Goldman's putting 16. The only down stocks inside the Dow Industrials, you got GE taking away 4. Now, this is what's amazing when you look at it. Bottom line is that, GE is only an $18 stock. This baby is down, bottom line about 4%. Guess what, though? It's an $18 stock. It's down 67 cents. That takes away 4 points. JP Morgan is down 37 cents, taking away two points. And that's all she wrote, because Disney's taking away a half a point. We get over and we take a look at GE. This little baby, folks, okay? Bottom line is that they did two different write-offs out here today. One of them is for the long-term health care. The bottom line is that inside GE Capital, they're taking another $15 billion that they're going to pay over so much time. This 1746 that wants to get tested. Right now, you're at 1811. We go inside the NDX 100, the strength versus the weakness inside the NDX 100. What you have out here, excuse me, folks. Right now, you have Priceline up 26 points. Amazon, King Dog, what a trip. Amazon right now is up 21 at 13.26. You got Google up 10, 11.33. Baidu's up 10.64 at 2.63. Tesla's up 6 at 3.42. Big numbers all across the board. Taken away from it, even though the NDX is up 63, we get NetEase down 3 points. You got Shire off 1 point. Alta's off 1 point. No big deal. Gold contract. What do we have with the gold contract? Gold contract right now is flat at 1334.80. If we do take a look at this contract, what you're going to see is this. So last Friday, gold contract gets over its B point. Now it does it with 5,000 less contracts versus the B point. So you don't have a confirmed ABC structure on the way up. That being said, what you do have is that you have the swing high at 1365 that wants to get tested. We did last Friday 365,000 contracts versus the B point of 370. Bottom line, I suspect what we're going to actually see is we're going to blow away the 1365. Why? Two different reasons. Number one, you got almost 100-point ABC structure on the way up. It's 95 point, which will get you to 1403. If you go take a look at the GLD did do an ABC structure on the way up and took out its B point and had the volume behind the move. We take a look at this, what you're going to see is that the GLD end up doing 9.2 million shares versus 7.3. So that structure is an ABC up. We go over and we take a look at good old King Dollar. King Dollar took apart, King Dollar took apart a couple different swing points. Bottom line is that you took out, we took out the swing from the, where is she? From the 29th of December, but the larger one, folks, we took out September 8th. The low of that is 91,011. And when you take a look at this, this is a very large ABC structure on the way down. big numbers, man. You know, the bottom line is that your A point on this is 103.8820, which was the highs in last January. Your B point is the low of September, which is the 91.011. Your C point is up here at the 95 150 area. That gets you down to the 82 area. So that's where I expect we're going to go. Yeah, it can take a bit of time to get down there, but bottom line, that's where this dollar looks like it's going to go. And if that's what we get, what you're going to see is that you're going to see those commodities take off topside and take off topside in a big way. Now, notes, the 10-year note, this is the one you got to keep your eye on, because what you have here is this. So picture, you can see markets, bottom line, you get the dollar. If we get a weak dollar like that, you know, you can picture the markets continue going too, because what's actually happening is that and other currencies, our markets will be getting weaker, and the dollar, our market's getting stronger. But it's a play on the currency. That's what it really comes down to. If we go into the continuous contract inside the 10-year note, what you're going to see is that right now we are trading at a price point of 123.01. It's the low that it was diving off the cliff at is 122.25. So we're over that level. That being said, I want to see this thing get back inside the 123.13 area, and I'll show you why. Whoops, TYH. Okay. So we're at 123 right now. And what you have is this. You got 123.12, 123.13. 123.13 and 123.12 is a larger range. That's when we broke down on January 9th. You broke down and you had volume on the breakdown. So bottom line, we'll see whether they can get back inside. If we don't get back inside it, that is going to continue to put big pressure on the 10-year. And, you know, right now, rate-wise, what we have is this. Rate-wise, we're at 2.537. And if we go back and we take a look at the last year, I don't think we hit 2.6. We got right next to it. Yeah, we did. We hit 2.626. And right now you're at 2.537. So bottom line is that keep your eye on that, because if in fact that is going to break lower, what you're going to see is that what that normally would do, we'll see whether it does it. What that normally would do would basically put strength behind the U.S. dollar versus weakness, and we have just the opposite right now. If we go take a look at some of the higher volume stocks out here, what we have is that you have GE down 63, Bank of America is up 27, you get Merck up $4, Facebook is up $1.19, you got Micron Tech up 42, Apple's up $2, you got Snap down 60 cents, Square is off $1.50. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow Industrials up 256. Nasdaq up 63. S&P's up 16. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 264. You get the Nasdaq up 65. S&Ps are up 17. And folks, if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN. You see the banner on the top of the side. You can hit the banner, bring up a demonstration account. You can see how this platform trades, whether you're trading indices, commodities, currencies, or what? Or Bitcoin. If we take a look at this right now, what you're going to see out here this morning is pretty wild. So we bring this up. Let's bring this up right now. We go into Bitcoin, and what you're going to see is that we have. Let me get this. Okay, so bring this up. If we go into the Bitcoin spreads, what you're going to see, they have weekly spreads. Now, the spread started trading at 8 o'clock this morning. The spread this week is 6,900 to 16,000 to 16,900. Right now, the indicative index is 11,950. Whether you're buying and selling it, you'd be buying it at 12,170. You'd be selling it at 12,700. Let's go take a look at this, and I'll give you an idea of what we have happening out here, because it's pretty intriguing inside this Bitcoin market out here this morning of what it actually did. XBT. So, and on the Nadex platform, of course, we're talking about defined risk. So when we take a look at this, what you're going to see, we came down today. So picture this. When Bitcoin first came off its high, we went from a price point of 19,511 down to 10,775. Bottom line, you had volume at that level. What do we do this morning? You get down to 11,199. And two different things end up happening out here this morning, which is pretty cool. You had the acceleration down. We take a look at that acceleration down. The acceleration down happened at 4 o'clock this morning, Eastern Standard Time, 4:50. You got to the low of 11,199. You did a counter trend bounce up to 12,249. You came back down into 11,457. And at that particular point, bottom line went topside once again. So when we go into the Bitcoin market, what you're going to see is that defined risk at that particular point was laid out. If you were buying Bitcoin right now, your defined risk would be maximum loss would be 529 to make 470. Earlier, when that was down there lower, because I was checking it out, bottom line, you had a maximum loss approximately 479, something like that. And it was just the opposite, actually. Bottom line, as you're test driving this whole platform, these are weekly spreads. They are good until Friday at 3 p.m. So it's something to check out. If we go back to Bitcoin for a second, it looks to me, now this is where it's going to get really wild. So the news is terrible on Bitcoin. No two ways about that. What you have out there in the news today is that they're saying that they're waiting for the rest of the regulations to come down on Korea and China, all of the above. The way this is trading, folks, it looks to me like this baby's going to go topside once again. Because this is the consolidation. You know, the bottom line is that now you're in a consolidation. And the first time down, mostly, so picture just like an equity or a currency or anything else. We came down so hard on the 22nd of December that area had to be tested. You know, more than likely, you probably came down, had lighter volume. You got a slightly higher high. Now you get a consolidation in place. You have two separate consolidations, actually. One of them would be the top of the consolidation on January 5th, which is 16,932. With both of them being the bottom, of course, of 10,775. So bottom line, we'll see how this trades out the rest of the week. But the way this is trading right now, I expect by the end of the week, we'll probably be at 14, 15,000 once again, because this is a tradable vehicle right now. And what was interesting is that I heard Mr. Larry Pesavento saying the open interest was rising at the CME, and there's no doubt it was. Now listen to this. This is pretty cool. Is that what's also going on is that one of the largest clients at the CME happens to be IG. IG is actually a spread better in Europe, largest spread better in Europe, and IG is the parent company of Nadex in the U.S. And it totally makes sense. So what you have there is that this is where these can get tradable much more, because now there is a hedging mechanism for defined risk. And, you know, I read this last week, so it was pretty cool. What they didn't have in the Bloomberg article, I don't think they really even understood it themselves, that isn't, they're not trading that, but that goes to show how many people are actually trading Bitcoin on the Nadex platform. That's what's going on here. So, which totally makes sense, because the difference is it's defined risk versus if we go take a look at, you know, Bitcoin out here and Ethereum and Litecoin, you're going to see Ripple's down. Look at that. Ripple's down big. Ripple's down 21%. Ethereum's down 14%. You have Litecoin down 12%. The last trade at the CBOE was 11,960. Last trade at CME was 11,925. Let's go over and take a look at. I'm going to take a look at Ripple right now, because that is quite a hit. So right now, let's see. In the course of 4 hours, we went from 176. Let me just do this. Let's do this for 3 days and see where we went. Man, these things are insane. So we just went from 187. That's not the end of the world. 187, hit a low today of 117. Right now, you're at 138. If we go take a look at this, let's see, in a month. Oh God, look at this. In a month, so this hit a high January 4th at 320. And they had a low this morning. It came right back into where it took off from again. Wow, what a trip. 117. So this took off on the 28th at 126. Let me pull this back. 6 months is too long. This is a cool looking chart, man. Comes back to the 124 this morning. That's a big break top side. That's when we went from 124 to 197. Rejected lower price. You know, both of these have some action, and we'll see how this thing shakes out for the rest of the week. But the way that they either Bitcoin and Litecoin, Ripple is set up, it looks like they are going to get up into higher price once again. Dow Industrials right now up 245. You get the Nasdaq up 55. S&Ps are up 15. Gold contracts trading up, trading flat, 1334. You get silver at $17.14. Notes and bonds up slightly. Stay right there, folks. Come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 236. You get the Nasdaq up 56. S&Ps are up 14. Let's go back to GE for a second and take a look at GE. I mean, Mr. Dave White was saying in the den that you get the conference call going on, and it's almost looking like he's talking that there may be more surprises in the future, meaning selling more companies. So let's see. GE surprised, and this is what the article is. GE surprised investors with a $6.2 billion charge tied to a legacy insurance portfolio, another setback. For the manufacturing company. The company finance unit will pay $15 billion over 7 years to fill a shortfall in the reserves in its North American life and health portfolio. While a big charge has been anticipated, the financial impact far in excess of even the worst case scenario. An analyst at Evercore said in client notes, the lingering problems from the old GE business underscore the high hurdles facing John Flanagan. Needless to say, at a time we are moving forward as a company, I am deeply disappointed at the magnitude of the charge. Flannery said in a conference call, it's especially frustrating to have this type of development when we've been making progress on many fronts. I don't believe that for a second, because what's happening, folks, this is not going to be the last one either. They still, and GE has got away with it. So picture something. The way that accounting goes, right, is that what they're saying now is this. They're saying that as they were doing their books, right, that there's $15 billion that they owe, that they know they owe. And they decided they're going to take this charge now, and they're going to pay it over 7 years. Now, they say they're going to pay it over 7 years because they can't pay it right now. That's the bottom line. That in itself basically is playing with the books. This is not going to be the last one you're going to see on GE, because what's going on is that inside that finance unit, they have other trash that's in there that isn't out yet. And, you know, it's amazing to me that they've got away with it for so long. Let's see. So what else do they have to say? The Boston-based company hasn't done any new business for a long time in the care market since 2006. So it was saddled with the obligations on contracts written years ago. The contracts are the big deal, because now this is their own company, long-term care, the contracts. My understanding is that they actually have other contracts that they're on the hook for that they haven't written down yet. The liabilities in these contracts can swell as higher costs than expected. And there's no doubt, folks, you know what has happened is this, is that the folks that bought long-term care, it was probably one of the best investments they've ever made. And the reason, there's two different ways, because I've looked at these policies. A lot of the folks bought not only long-term care, but then they bought an inflation kicker in it. Now, check this out. We know that inflation hasn't been going at about 2%, right? Well, what ended up happening is this. You could buy an inflation kicker in most of these, and the inflation kicker that was in there was 5%. Yes, you heard that right, 5%. Okay? So the cost of that was huge. Let's say a long-term care policy, if you were like 65, somewhere around there, and that's very old to get a long-term policy, but that was the one I happened to be looking at. That was about $3,500 a quarter, right? Bottom line, out of that, $1,700 was the inflation kicker. Bottom line, that inflation kicker ended up being worth a fortune. Why? Because what ends up happening is that in the context of what they're going to be paying off per policy is approximately $325,000. That's at today's prices too, because the inflation kicker, that's if you had started right now, because the inflation kicker is in there for the years that you're going to collect on the policy. So bottom line, they get big numbers. And by the way, that's all of most of the short-term policies. So there's more there. And I'm wondering what they don't say here. Well, here, let's read the rest of it. Investors have embraced since GE warned last year about potential problem in its long-term care portfolio. A shareholder meeting in November, Chief Financial Officer Jamie Miller said the company was likely to take a charge in excess of $3 billion. Yeah, well, $3 billion just went up to 15. The review results in a $9.5 billion pre-tax charge. The after-tax impact of $6.5 million will be 7.5 when adjusted. Long-term care insurance have been a headache for many of the companies active in that. Okay, so, and this is going to be, it's going to be Genworth. One of the largest issues of long-term care policy, GE has been working for years to limit the volatility tied to insurance companies when they spun off Genworth. They spun that off, and thought they're still on the hook for it. This is the whole deal about being on the hook for legacy companies that they send off and they hope won't come back and bite them. Bottom line, it's back, it's big, and I expect you're going to see more of them too. Pretty amazing. Let's go over and take a look at the king out here, Amazon, see where Amazon's trading right now. So Amazon right now trading up $23 at $13.28, and it's a monster. Oh, he's talking about a monster. Let's go to our man Jim in Minneapolis. Jim, what's going on, brother?
Tom, how you doing, brother? Calling from the Minneapolis Miracle over the weekend.
You took it by storm, brother.
I've taken it by storm. Actually, it was storming. We had snow on the during the game, and it was just unbelievable.
I'm telling you, man, I'm so happy for you guys. So picture, man. I'm with and Jim and I were actually he texted me, folks, and so it was so cool because I was sitting there, right, and I think I was writing. I was doing something, and I was watching football at the same time, and like you saw the play first, and then your quarterback, like, he didn't even believe it. It was unbelievable, wasn't it? It was like, yeah. Oh, no, this really happened. We've been so used to, Minnesota, the Vikings, it's been a perennial, missed field goals, Yeah.
It's just unbelievable. So, it was just you could hear the whole state of Minnesota just going wild. You could just feel the energy. It was just unbelievable.
That is so cool. And now, of course, you're hosting the Super Bowl. So, and I heard, the stat that there's no one that ever hosted the Super Bowl and actually was in it simultaneously. So that'd be pretty cool, man.
Yeah. We go to Philly next weekend and, take care of business there, and we're back home, and it'll be insane here for 10 days if we get to that point. So.
Yeah, and then
which I think we have a great shot at doing. So it should be a lot of fun.
Listen, man, it's going to be a lot of fun. And, so Tommy and I were talking last night, right? And we were talking about you and, Minnesota, the Vikings. And it was like, oh, no, this is going to be terrible, man, because, we're going to want the Patriots to win. So I want you guys to win until – I know. What can you do, man?
Oh, man, the Patriots, yeah. That'll be interesting.
I know.
But, I was going to ask you, Tom, on Bloomberg, in regards to the cryptocurrency stuff, do you look at the volumes at all relative to the price action?
You know what? Here, stay right there. We'll talk about that.
Yep.
Stay right there. Jim and I are coming right back, folks. We want to hear from you. And they just took the S&P down 8 points, folks, in about a heartbeat. So we'll see what's happening out there. You got the S&Ps up 8. They were just up 19. Going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. If you haven't tried David White's weekly investment newsletter, The Technology Insider, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Technology Insider. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're talking with our man Jim from Minneapolis. We're talking about Bitcoin, and the question was that the volumes. So, Jim, what we've had is this: prior to either the CBOE or the CME trading, right? I had no volumes, right? And now I do, though, which is kind of intriguing. So, on the 22nd, the CBOE did 12,554 contracts, right? Thus far today, we've only done 7,566. So thus far, it looks like we're gonna have a test with light volume. Now let me see if I can bring up. Now that's gonna be the CBOE. Let me see if the CME. 1 second. Okay, so XB.
The other thing I was looking at, just the dollar volume traded on all the exchanges together, not the options, but just like Ethereum. If you look at that. When I look at, there's a website I look at, it shows you dollar volume like
that's
500
cool.
million, 600 million, 700 million.
No, I haven't, but that's pretty cool. No, I'm with you, right? Which would, that would. See, I don't have the CBOE here. I mean, CBOE. No, I had CME yet. Interesting. Okay, so this is still just a cross rate. Let me just see what this looks like. No, I don't have that. So, cancel that. 1 second. Yeah, I don't have. Oh, interesting. Let's see what this does. 1 second. Hold. This is going to give me the dollar rate. No, nothing's there. Nothing's there. Yeah. So,
Gotcha.
Listen, it's always a good thing to have that. I mean, that's where my head would be at. Do you know what I mean? It's
yeah. I actually over the weekend pulled off some Ethereum just kind of just based on that, watching it and the way it's been trading and reading about the insiders where like Litecoin, the guy who started it, sold all of his coins, and I've been reading about guys, the insiders of Bitcoin, original guys have been coming out of it heavy. So
it would make sense, right? I mean, that's it. You're done for life, man. You get your 100-foot yacht, man, and you call your friends up and let's go, man.
Yeah. Get a boat and go down and visit Tom,
Oh my God! Visit me.
Unbelievable.
Kidding me? Let's go visit Italy and Ireland and everywhere, man. Holy cow!
Speaking of, I was looking at Zillow. Yeah, ZG is the voting shares. There's Z also, but
okay.
ZG is the one I was looking at.
Okay, so here I'm going to tell you guys a great story. Zillow. Yeah, let's look at this technically first. Yeah, so you're in a consolidation here. And see the top of the consolidation, $51. It has volume. Okay, so technically that's where it wants to go. So check this out fundamentally, though, folks. Okay, we're building a lot of houses, brand new houses. They're beautiful houses. Right now, I got two. How many? I got two, three. I get 3 for sale. So check this out. So we've been doing open houses every Sunday. And what we've been doing, I've been splitting up the advertising between the Tampa Bay Times, because they have a good real estate section, the Facebook, and I didn't have to pay anything on Zillow. Okay, who's the last one? Tampa Bay Times Facebook was $450 on each one. Okay, I'll grab it. Bottom line is this, is that what has happened is that Zillow, folks, is going to end up taking over the whole retail real estate business. It's this dramatic too. So check this out. When when people were coming in, we were asking each one of them, you know, where they were getting us from. Now, it's unusual in the Tampa Bay Times that the paper is actually working really well, because they put pictures up inside the paper, okay? And so they say have an open house. Facebook didn't work at all, you know, and that could make sense because it's not the crowd, right? And then when I went to the builder convention this week, Jim.
Yep.
What Zillow did, Zillow was soliciting me, and what they're doing, folks, is that they're building out special pages for builders outside of the aspect of realtors. So what they're trying to do is this, is that they, you know, we're on a multiple listing right now, but what they're doing is that they're saying that, hey, guess what? If you want to pay us a certain amount every month, right, we'll not only build out a page for you, we're going to stick you on a continual basis in front of everyone. And then I was looking, I says, oh my God, the writing's on the wall. And what it is that right now for you don't have to pay if you're on the MLS, which we are. Zillow picks you up, right? Now they've started a program for builders, because some houses aren't up yet. You hit a button. This is where the house is going to be. This is where the plans are. This is where everything is. These guys are going to wipe out, I would say, retail real estate brokers. You know, yeah. They're gonna bring the amount down dramatically, because the way that we actually get on the MLS, I'm not a broker, but the way you get on the MLS is that we can pay a company $150, and then we pay brokers 3%. We'll pay them half. And right now in the brokerage industry, the normal brokers even paying them 2.5. So we save 3%, we pay 3%, but you can see what Zillow can do. Zillow can crack that whole thing wide open. It looks like they're going to, man. So
yeah, I've been reading about them applying the blockchain to the whole industry, and $180 billion worth of fees that go on during the home buying process, and they're using blockchain to eliminate. I mean, there's going to be a lot of pushback, right, from all these realtors and then lobbying and that kind of. But it's going to happen eventually, like you said.
It is, and I'm sure that they're probably at the point right now. They're probably figuring out, does the amount of advertising revenue we get from the realtors make sense now to do it, or can we string them along a little bit longer and then we're going to do it? It looks to me like it's going to happen. Maybe year, 2 years, 3 years, whatever that is. But it's like a Trojan horse, right? They came in, the realty business in general gave them traction, gave them all the advertising traction, and then all of a sudden they look and they said, hey, if we get 3% versus 6%, how much more is that going to be per house? And guess what? It looks to me like it's still very inexpensive. They're going to get $550 a month from us, and they'll let you sign a 3-month contract. But that's nothing when you get $2 million worth of houses for sale right now. Do you know what I mean? It's like, okay, that's fine. Yeah. It's not a big deal.
Exactly.
Yeah,
so. It's going to be interesting. And I know there's one of the large real estate brokers that paid Zillow just here recently at the beginning of the year a large fee to make sure all their brokers were first and on the page when
it's worth it.
When their house comes up, and and they've gathered all the data from every county in the country.
Oh, totally.
So they have the data set, and all that data that's otherwise just very cumbersome to process. So anyway, Tom, great. Thanks for the look, and look forward to talking to you next week with the heading to Minneapolis for the big miracle that happened.
Taking it by storm.
All right, see ya.
Love you, man. Take care. Stay right there, folks. We're coming right back. Dow Industrials right now up under 94. Nasdaq's up 52. S&P's are up 10. We're coming right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. We were just talking Bitcoin with man Jim. We're talking Ethereum. Well, guess what? Mark Cuban just came out. He's probably just bought a bunch of it. Bottom line, he just come out saying that the Mavericks are going to accept Bitcoin and Ethereum next season. And we just did pop up about a couple $100. Bottom line, pretty wild. Let's go over and take a look at the silver market here for one of the Tigers. Silver right now is trading at a price point of $17.15. Bottom line, this looks to me like we're going to go up into this 1836 area. You know, you've got 149,000 contracts. You're trading into your swing. You get volume into the swing. You get all of the above. My take is that we're going to go. It's going to be volatile, but it looks to me like you're going to go. You stay right there, folks. We got a lot of great programming coming up for you today. We got the swim lessons coming up next. Of course, we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. And I'll be back this afternoon. You got our man, Mr. Andy Heck, because, of course, every Tuesday and Thursday. What's going to get intriguing out here, it looks like the S&P is going to give it up. We just came down. Man, we're coming down fast, man. There's no two ways about that. If we take a look at this S&P, someone hit this S&P and hit them good. We just went from 2808 to 2797. This thing got hit 2 separate times. The first time was right before the last commercial, and now they're basically going after it again. We hit a low thus far of 2795. It looks to me like, guess what? This baby's going to give it up, and they're starting with the S&P, which is going to be intriguing. We'll see whether it goes to the rest of the indices. Stay right there, folks. You have the swim lessons coming up next. Dow Industrials up 172, Nasdaq up 43, S&P's up 7.5 after being up 19. Stay right there, folks. Swim lessons come right up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.